Hey guys, welcome back to the YouTube channel. This video is a Q&A. So if you had ever wanted to ask any tough questions and questions that, you might have for me or you might have for Nevada as a mortgage broker, we're going to be asking each other tough questions today. So maybe just spitballing some ideas on some past learnings, some past successes, or where we've seen other people be successful. So maybe to kick off, people might not know who you are, Nevada. Maybe just kick off and tell people a little bit about yourself and your kind of journey as a broker and your story.
Yeah. So I'm Nevada. I'm from Cube Home Loans.
My mortgage broker, by the way.
yeah. We have 9 mortgage brokers in our team. We have a office based in Logan Home in the south side of Brisbane,
where I grew up. I might add. I grew up in Daisy Hill, not far away.
Oh, there you go.
The old stomping ground.
Yep.
Yeah.
Locals. So we're a business. We help a wide range of clients. One of the benefits of us is our brokers. We try to specialize in different areas so we can get particularly good at our niches. So we have someone that focuses on rural. We have myself and Bart who try to work primarily with property investors and business owners.
Yeah.
So we try to cover all bases of finance. I've been in mortgage broking, I think somewhere between 4 and 5 years. I can't quite remember, to be honest, as a broker. And then prior to that, I was working in a financial planning and accounting business.
Yeah.
And then prior to that, I was a manager of actually a printing and book publishing business.
No way.
Yeah.
What were you doing there?
Family's business.
Cool.
So I actually went out of there straight out of high school, started sweeping the floor.
Yeah.
And
that's how you get a start in any business, right? I'm just willing to work.
Yeah, and then transitioned into running the place. I think they, at the time, maybe 20 odd staff in the business. And I loved the business side, the numbers, and growing it and expanding it and seeing it grow. Dealing with creatives they weren't my kind of people. I like dealing with number.
So was it book printing for just any day people who wanted to publish, or?
Yeah, authors. We had some big successes as there as well.
Wow.
It was self-publishing, so everything from
that's cool.
Small mum and dad stuff to bigger projects. So it was interesting in that regard.
Yeah.
But yeah, definitely wanted to get involved more in the property and finance side.
Cool.
Made the leap.
And maybe talk me through the last few years. What does your business look like in terms of, maybe the type of clientele, where you've seen the markets go the last few years? What have you kind of seen on the ground?
Yeah, so it's been a good few years. I think the market has a lot to do with that as well. So we've been able to grow as a business quite significantly. Went from 3 brokers in the team to now 9.
Wow.
So had some good growth there. When I first started in broking, I would be what you call a generalist broker.
Yeah.
Where I'll help anyone and anyone.
You want some debt?
Yeah, I'm hungry. Give me.
It reminds me of like 1990s billboards, like post-apocalyptic. You want debt? We can get you some debt.
Yeah, and you're trying to learn the ropes and
get people into products they're looking for.
Yeah, exactly. Yeah. And you liked first home buyers. It's a bit simpler and all that sort of stuff. And then I found I was resonating more and more with business owners. One, I like seeing the financials and asking, you've had some big growth. What's that relate to? And that's part of the questions I need to know, but it's also personally interesting for me as well.
Yeah.
And then also property investors, the things I've been interested in personally. So as I've been able to, I've been gravitating more and more towards those.
Specializing in property growth, portfolios, resi, and even commercial as well.
Correct. And with the nature of, one, how competitive the mortgage broking market is now, and 2, how complex finding suitable solutions can be. I think you kind of need to have an area of focus now.
Be a specialist.
Correct. So the mortgage broking market share has increased. Where I think it's 85%. It's
crazy. People used to go to we joke, they're closing all the CBA branches. I tried to go to CBA. I went to Bali, which was. It's a whole nother story. If you're interested in hearing about Bali, go to the Unbound podcast, because I'll tell you a lot more about that horror stories. But the reason I say that is I tried to go to a CBA branch. They're just not open. Yeah. They're all closed. There used to be one. We live in Greenslopes here in Brisbane. There used to be one around the corner, shut down. Another one shut down. They're closing all those branches now because people are going to the brokers.
Yeah, that's it. So when the value proposition was, we're better than a bank, it honestly is a lot easier to acquire business that way. When the value proposition is when we're competing with another brokerage down the road, like most of our industry does a good job. So you got to try to differentiate yourself in a market where we have most of the same products and
I think that's totally fair. Way. It's the same in the buyer's agency space. You got 10% of the industry, broking or buyer's agents, which don't do the right thing.
Yeah.
And they give the whole industry probably a bit of a bad rep in some cases. 80% that are doing well, they're doing some volume, growing their businesses. And then I think you've got that top 10%, which is what probably you're trying to be, what I'm trying to be. The outliers that are going above and beyond and giving something, not just a standard kind of service, something that's bigger and better.
Yeah.
Yeah.
So yeah, focusing on that area of clients, and then there's two sides to it. It's been good for attracting good business, and the other side of that, it's more rewarding for me. So it makes it easier, and I'm more energized to keep doing it. So yeah.
Well, yeah, excited. I'm the same with my business. I'm excited when I have clients sign up who have 6 properties and they've worked with other BAs, and we can adjust their portfolio from where they are right now. Don't get me wrong, I'm excited when someone's starting to, but to get the breadth of opportunity to work with someone from no properties up to 10 and go, okay, how can we get you to that next level? Having that opportunity and specializing just for me in that resi Brisbane space and like Southeast Queensland space is exciting. So I'm sure it's the same on the broking side.
Absolutely. And I think a lot to do with the YouTube channel. We're getting a lot of clients from all over the country as well.
Yeah. That's one thing. That's a good point to add. Like I'm a Brisbane specialist. So if you want to work with me and you're looking to buy a property, it's just Southeast Queensland, but you can work with Nevada, who's my broker. You obviously help anyone, anywhere.
Yeah. Anyone in Australia.
Even
18.
expats. Like if you're in South Africa, but you're an Australian citizen, or you're in the I've got clients in the UK, Dubai. As long as you've got a passport and you can get your finances in Australia, you can buy houses in Australia, then you can do your broking.
Yeah, that's right. And with the breadth of our team, we can cover a lot of sort of different areas in lending, and from commercial. It's not something I do a lot of personally. Yeah.
But it's within the
correct commercial property purchase, even business acquisitions. We have a team member that's sort of dedicated to that sort of thing as well.
Very cool. Very cool. Do you have any questions for me?
Yeah. So one of the questions I had is me and my wife, we got involved in the property market when we were quite young, when we were 18. Yeah. And we've done okay. Like some of the houses we've sold actually allowed us to purchase and buy into the business we're in now. Yeah. So it's sort of helped us get ahead in that regard. In hindsight, I've done okay buying some lemons, to be honest. Like we bought some properties that we could have just picked better. And if you asked me 4 years ago at that time, what do you think of a buyer's agent? Honestly, I'd probably thought I don't really understand the value.
Who's a buyer's agent?
I don't really understand the value proposition. I can find a house myself. Yeah. My question is, do you still get a lot of that, or do you feel like people understand buyer's agents a bit more now and see the value?
Yeah, it's an interesting one. Like I've made videos saying you don't need a buyer's agent. Like I'm probably a bit anti establishment sometimes with the way I go about things. I say, so to give you a bit of context, I'm an accountant by trade. Yeah. So I started as an auditor 2016, and I worked for a big 6 accounting. I worked for a company called Grant Thornton. Yeah. And I worked there to get my chartered accountancy and then move into a senior associate position. Then I went commercial. I'm never going to stay in the traditional accounting. I'm not cut out for 8 to 8 and sitting in an office, and just churning over different businesses. But that gave me really big exposure to see big business, like, businesses that are doing 50 mil plus, and what kind of staff they have and how they run and which ones are leaner and what I wanted to do. And so I didn't know probably until about 2018, so 2 years into being an accountant, they're like, buyer's agent, that's something I could do. So I saw other guys out there running these types of businesses when buyer's agents weren't even that popular. Yeah. And I went, okay, that's something I can help people with. And then I wanted to build my portfolio. So once Emily and I had gotten to about 3.5 mil of property, 3 houses in Brisbane, we were like, okay, we know what we're doing. We know why we're looking at certain data from a quantitative side and a qualitative side. Let's go out and try and help friends. So that started 2019, 2020. And then 2021, we went absolutely public. The YouTube channel really had grown at that point, and we started servicing clients. So when people are looking for a buyer's agent, I say it's all about the value. So our fees are not cheap. We're moving into a premier pricing, a little bit more expensive than some other buyer's agents. I actually paid for a buyer's agent for my first property as well. Yeah. So that's probably a bit different to a lot of people's journey. Like, why would you use someone to buy your first place? And he was not great, to be perfectly honest. We found the property, but he saved us on the negotiation. Yeah. because we were green, because we were fresh, we were excited, and that's where a lot of people get caught. They're super excited. We were going to offer 835, and this house had been sitting on the market a long time. And he was like, don't offer more than 800. So yes, we paid him 10, 15 grand around that amount, but he probably saved us 35.
Yeah.
So I saw the value out the gate just in a little window of him negotiating for 2 hours.
Yeah. Just that point of separation and having the emotion a little bit out of it.
Someone who's doing it every day of the week, someone who's not emotional, that's right. And yeah, even though we found the deal and there was a lot of other parts of his service that were lackluster, just that area I saw the value. So when we started the business and when people come to me now and go, why would I use you? The key points of difference for us are the expertise. So we're doing this 6 days a week. You know, my business has now grown. We started with just myself. Now that's grown to 7 staff. And so we cover quite a large area, 40 Ks around Brisbane, and looking to expand to the Gold Coast, which is a really exciting part for our business in the next 12 to 24 months to formally go public with that. And so when people sign up, they go, well, what makes you different? One, we're experts. If you want to buy here, this is where we can help you. So that's our key point of difference. And then I'm a chartered accountant. That's also a huge selling point. And then the third thing I say is I'm doing it myself. So I'm not just, you know, there's a lot of people, I joke, you can get your cornflakes ticket these days with real estate licenses.
Yeah.
You go do a little course.
Couple-day course.
That's right. Couple-day course, bit of work experience, fill out some forms and boom, here's your real estate license. So it takes 6 years for you to get your chartered accountant license, 3 years of study at university, 3 years postgraduate and work experience in that as well. So that CA I think is very valuable and a different point for us as buyers agents. And then what I'm doing personally is obviously the skyrocket because not many people. Again, I don't like tooting my own horn because I go, oh, well, we're at 8 mil now roughly, or when we're at 5 mil at 27 and 3.5 mil at 25. You know, I don't want to go, but it's good to show people because that's where we've been able to encourage others. That's where we can be of big value to you. If you're paying 17, 20, 25 grand for our services, but you're getting years off your journey, that's years of your life back and more choices. So that's probably how we encapsulate value as a whole. It's all about that value proposition.
Yeah, I think that makes sense. And in hindsight, I think I would have been better off if I bought properties to a good buyer's agent. And like you said, everyone's not made equal.
Yeah.
But yeah, you can see that for
it's
sure.
all in those 1%ers. Like I say to so many people who chat with me, I'm like, oh, go to Nevada and get an interest-only loan and have liquidity in your offset. Just saying that could blow someone's mind.
Yeah.
And then the next thing is, this is why I would buy at this price point for you specifically. And you add up all those 1% tips and you end up compounding way ahead of the competition, way ahead of the everyday person who's not making all those 1%.
Yeah, and that's a really good point. I'm constantly saying, I'm not an accountant, but check this with your accountant.
Yeah.
Because I sort of identify maybe opportunities. Like I had one where someone sent a contract and it was 50-50 ownership and one of the applicants had personal services income that was way higher than the other and it was negatively geared property. And I said, look, I'm not an accountant. Just go ask the question.
Yeah. There's 99 and 1. There's just one person's name. There's trust structures.
Exactly. And she came back and she said, thank you so much. You've saved me $8,000 a year.
Crazy.
So she's my best mate now. And again, I'm not an accountant. I just sort of know enough to go just check this out. I would check it personally.
Yeah.
So you should probably chat to your accountant as well. And it pays to have good coverage with your team overall, like your financial team, and have all those sort of facets covered.
Yeah, and that's where the bigger team is huge. So yes, your buyer's agent can help you strategically, like we do, and like I work directly with clients, which is a bit of a point of difference for us. We have a top-down approach rather than work with the boffin at the bottom in terms of our business. But I think you've got to have the broker, the property manager, the accountant, everyone in that picture. And that's where we're strategic partners. So if you work with Nevada and the guys at Cube and you sign up with them, I'll be able to have that clear community. We know what we do on a regular basis with lots of clients. And so you're going to get the benefits of a bigger team. Even my accountant, Derek, you can work with him and I go, okay, I know how they work, or property managers or renos. It's all about that team. If you can get a bit of interconnectivity, they don't have to be, they don't have to be under one roof. You have your own business. I have my own business. But if they have that interconnectivity and that trustworthiness, that's where you can really get the benefits of a big advisory team and building out a portfolio.
Yeah, absolutely.
Yeah. My next question for you is, what do you see the best investors do? Like, what I would say, I like to say I've got a pretty good portfolio in terms of dollar value, but what are you seeing the outliers? What are you seeing the best people do? And how can the everyday people, people that want to do that as well, what can they kind of copy from the best of the best?
I wosay there's one of the benefits is I see the ins and outs of the reality of people's circumstances and property investors. And
they have to lay it bare, don't they?
Yeah, there's no sort of hiding from it. And one of the interesting things is I've seen examples of all the different strategies work. Like,
that's a good point.
The buy and hold, and I've seen that, and then the just yield only. I've seen that work.
Yeah.
And mixing and matching of both. Like, I have some property investors who have their blue chip properties which have certain objectives with, and then they have obscure locations I've never heard of with great
speculative
yields.
place.
Yeah. I've even seen some that have larger resi portfolios, but then they sort of just dabble one or two commercial properties in there just to sort of mix and match. I guess there's no silver bullet.
Yeah, show me the playbook. What's the playbook? There is none.
There is none.
Yeah.
I've seen examples of all of them, all the different examples working and potentially not. I'd say the biggest factor I would say would be the amount of time they've been doing it for most. Like, you've built your portfolio, I would say, very quickly.
2018 to 2025. So 7, 8 years.
And I'd say that's more uncommon than most.
For that size, yeah.
With the people that have the large, it's just they've been doing it for such a long period of time that they've had had that growth, and they've sort of doubled down, and they haven't sort of, I guess they also didn't lose their mind when the market wasn't performing as strong.
They've stayed the course.
Exactly.
Yeah.
And then panic when things weren't looking as good, and then didn't panic and get, like, when the prices went crazy, they didn't just go and sell straight away either. They kind of just kept that emotional stability with the whole thing.
Do I need to? Is it part of the big plan with this?
Exactly. And the coolest example I've seen is there's a few clients I have which are actually retired from their day-to-day and their portfolio funds their lifestyle completely. One, he has two young kids, and he just, that's his main focus. Then he goes and does some maintenance on one of the properties and just focuses on his kids entirely.
Wow.
His portfolio's funded that, but he's
not working actively, or
his work is the properties. That's it.
Wow.
Looking for properties and does the renos himself.
Yeah.
A bit here and
hands
there.
on.
Yeah.
So a very active approach to his property, but it is his main gig.
Yeah. And he picks and chooses how much he takes on.
Okay.
To that effect. But I think he's also been accumulating properties for probably 2 decades or something.
Wow.
So yeah.
That's really cool. I mean, I think I hope the vision for most people investing is choice, not stuff.
Yeah.
I'm a Christian that's my value basis. So that's how I run my life. And I go, why am I doing this? What's the point? And like, as a landlord, people think, oh, you're trying to be greedy and you're trying to make lots of money. And the reality is most landlords, 90% are going to be mums and dads trying to make a better life. The Australian government's not giving housing stock away. Yep. And so mum and dads in Australia are the ones providing that. And it's an opportunity, but it's not a quick fix.
Yeah.
And so the biggest key that I see in a lot of people to switch is when I say to them, once you've got the properties, you can now make changes in your life earlier. A lot of people think it's that 20-year mark that you can let the foot off the gas and retire. And to me, it's actually, once I've got the 3 houses that I know are going to give me that, 100K in retirement, and I can now change jobs. If I'm working as a teacher and I'm sick of that and I want to go try, whatever it is, agriculture, I want to be a farmer, then you can have a crack at that as long as you're paying the bills.
Yeah.
But obviously, if you want to go faster, I'm sure the most people you see succeed are the ones that continue.
Yeah.
They grow their day job income, they grow their business income, because obviously that's just a self-fulfilling prophecy.
Yeah, and this isn't for everyone, but generally the easiest, I guess, from a acquiring property point of view from the lending side is a business owner that the business is very successful. You can't just go and say, oh, hey, you're here now, why don't you just go start a business and make millions of dollars? It's easy. It's not.
Come on.
It's not.
Come on, guys out there. If you're making 100 grand next year, $1 million.
Yeah, it's not that simple, unfortunately, but that's a good position
where you see don't they say you make your money in business and you park it in real estate?
Yeah.
So a very common approach. And I think I've been quite public in saying that from 0 to 5 million, we did on PAYG incomes.
Yeah.
You know, dinks, double income, no kids.
Yeah.
We were able to go to 3.5 mil with no kids, and then 3.5 to 5 mil with one kid. But to go from 5 to 8, I don't think would have been possible without the income growing, running Purpose Property, being a very successful business. Without that success, you can't become a massive, you can't get to those magnitudes, I don't think.
Yeah. And it's just like with level of income, it's the property portfolio. Like not everyone needs a certain size.
2 to 4 mil, like 2 mil is what, 4 houses at 500K.
Yeah.
That's a lot for the everyday person.
Yeah. And as time goes on, you're getting further and further ahead. It's a good place to be. I always say to people, like I had one client, this is not a property investor, and they're like, we bought the house, I helped them on their first home buyers. They bought this house, it increased in value, 200K over COVID or so.
Yeah.
And they're like, we're just going to sell the house and we're just going to rent for a while and then go on a couple of holidays and
spend it.
And this is one of the few instances where I was like I understand the thought behind it and I get it. It's like, mate, just stay in the market because you don't know what's going to happen.
Yeah.
Over the last 2 years, it's continued to grow, and he probably wasn't anticipating that to be the case. He did actually, thankfully, stay in the market. He rented the house out instead, and they kept. And
Reinvest. Yeah, that's great.
So you have the opportunities to sort of experience those lifestyle things, but when you have that, at least that. Even that first property, you got the placeholder, you got the foot in the door, not getting any further behind. And then when you have multiple properties, you're actually getting further ahead. So
for sure. Yeah. That's where I see most of my wealth creation is that compounding. Once you've got those properties and you're getting 5-10% growth on a big asset base, it's a lot of money. And then the temptation is to sell, but you got to have that vision and game plan.
So my next question for you is I've had investment properties historically, and and with your size portfolio, what's the downsides? What's the things you don't mention that are the hairy parts of owning that many properties?
Could be a long list, right? There's lots of downsides. There's lots of downsides with any, I think, form of investment, but property being a physical asset is so hands-on. Like so Emily and I have been, the motivation for me was I didn't want to be a renovator, to be perfectly honest. Renovating was a means to an end, and I could see that trades are making $100 an hour. If I'm doing a very bang average job, but I'm still doing the job, if the paint looks okay, then I'm going to get a value uplift because this trade he's getting $100 an hour, or he's charging $200 an hour in the actual invoicing. And so when you buy property, I like to buy headaches. So I buy lots of headaches. I always say if you buy problems and you can solve them, you're going to make more money. Yeah. And so that's probably a big outlier for Emily and my portfolio is that like Em and I bought problems all the way through. And that's probably how we were able to scale so much faster. Yeah. So to deal with the stress and the headaches, and I had my hair fall out, like I got alopecia in 2023, and that's when we did the flip project. So my biggest mistake in investing was actually just taking on too much with too short a time horizon. Yeah. I had a 6-month time horizon. It was like, cool, let's make a quick buck so we can do these renos here and boost the cash. In reality, if I'd spent my time of that 6 months building my business, doing more content, keeping my current property portfolio sharp, I would have made a lot more money. Yeah. And so the biggest mistakes that I personally have seen are being too short in my view. So I need to stick to I always say 7 years. 7's a magic number. A lot of people's favorite number is number 7. And so I'm like 7 years is like a great horizon. It's not, I wouldn't say 7 is actually that long term, but it's not short term either. Yeah. So 7's like a mid long term view. Ideally you've got a 10, 15 year horizon, but everyone gets too impatient. And so when we started the goal, I think the original goal was 2.5 mil. And it was like the biggest hurdles we overcame. Yes, they were the toughest points. So doing bathroom renovations and all those things, but they were also our biggest successes. Yeah. So yeah, I'd say for most people, it's going to be the management, the repairs and maintenance. And if you're doing value add, the renos, that's where you see the biggest headaches.
Also the biggest opportunity at the same time.
That's right. And also the other thing I would say from like the physical property side, the other big side that I think catches a lot of people is actually the broking. The reason we've been so successful is I'm a chartered accountant. So I pull, Nevada knows because I send him my spreadsheets and I go, here's where I think I am. Put this into your, you guys call them game plans, put it into your lingo. But I would say I know 95% of what's going on in the portfolio at all times. You've always got an unknown, but the less that unknown is, the lower risk you have. And so a lot of people think property investing is risky, but you can de-risk that with all that knowledge growing over time. And so the other headaches I dealt with were banks. I had a broker drop me once. They're a big broker in Brisbane or Australia. And I'm happy to name them if you want to ask me in the comments. But the broker, big sales pitch, big social media following. I had grown our portfolio from 2 properties and we were going for this house right here. They almost cost me this house. It was under contract, 7 days into a 14-day finance clause, and they said, get stuffed.
Wow.
Good luck. And they were trying to move our entire portfolio from CBA to Suncorp. And the BDM at Suncorp said, nah, it's too hard. And so Nathan, who's one of the guys in that business, said, we can't help you, see you later. Like, we can't help you get the finance, and just dropped me. Now, at that time, it was 2020. So my business wasn't the social media profile that I have now, which is a blessing, under my name, Luke Wiles. I didn't even have probably 1,000 subscribers at that time. So they wouldn't realize that every year I talk about this headache that their name might come up. But basically it could have cost me, and this house we bought for 680. Yeah. And within a few years had grown to 900 with the renos we did. And then market value is about 1.9 to 2 mil comfortably now. Yeah. Now we've done our major reno and spent a lot of money. So that paperwork that a lot of people get stuck on, I think kills deals. Oh, Nevada wants me to send him another ID. He wants a passport. He wants everything. Yeah. He wants a TFN. He wants my children's names. But if you can get over the hurdle of providing all the info and you can get the paperwork done, you're going to get yourself into the market.
Yeah. And I think to take a lot of that pressure off, if you can be pre-approved or fully assessed pre-approved, you can get that work done when there's not something live.
Yeah.
It not always, but a lot of the time takes that pressure off and out of the circumstance. But yeah, that's why I just dropped someone mid.
Well, the sad thing is, a good broker like yourself would have said, can we go to a short-term risk option? Yeah. Can you pay 9% for 6 months?
Plan B, plan C.
Plan B, plan C, plan D. Yeah. And we were early, we were earning decent incomes. We were basically living for free because we were renting out the rooms in our house. Yeah. Maybe the bank couldn't look at that, but a second or third tier lender definitely could have. The funny part is I called CBA directly and we had 2 houses worth 2.5 mil. CBA were like, we'll get the deal done for you. And this is a major bank. And CBA did the deal on this house. Yeah, so the fact that finding the right broker, and I've used different brokers and banks to find Nevada, right? And I wouldn't say bad things about other brokers that I've used. They've been right for the right period of time. Yeah. But to get me from 5 to 8 mil and to give me comfort in the strategic option, you've got to find someone that's at or above your level. And so the brokers and banks I worked with in the past were at the level I was at that point in time. But if I wanted to get to a more advanced stage and I wanted to be the best, do the best for my family and for my kids and for my choices, you had to find the right expert to help you with that.
Yeah, and I think unfortunately, a lot of brokers put particularly with property investors, they get their personal opinion about property and what's possible, and they put that on their clients. Like I had a first home buyer come to me and they said, we chatted to another broker and he knew his stuff and he was good. When I mentioned to him that my big goal was to have a big property portfolio, he more or less laughed at me.
He didn't want to, it's like, you're not going to do that.
You can't put people in buckets and do that. If that's your ambition, let's do what we can to get there, and let's plan, let's obviously get this first property and let's get things right now so that makes it easy for that next. And a big part of that's that little bit of financial education as well. Like if you go and buy, the brand new Land Cruiser and your monthly repayments are $2,500, you're probably stopping yourself from getting that next property. Yeah. And I think that's one thing that you've done really well also is you haven't gone out, even when you had you haven't gone out and bought the fancy cars and taken on extra debt you didn't need to. And
well, I think I was 27 and CBA literally dropped in my bank 750 grand. And they were like, we don't care what you spend it on. Like, it's secured to your properties, but you can basically free reign. Yeah. And at 27, I was like, oh man, that could be good.
It's a Porsche 911.
Yeah. And then I went, okay, that would buy me a nice Porsche. And I'm going, well, Porsche now, Porsche maybe later when I'm 50
Yeah.
and I go, maybe that's the time to do it.
Yeah.
But you'll find that, we were still, it's quite funny. I haven't told this story in a long time. Em and I drove a Holden Barina
Yeah.
and we had that 750 grand and we didn't buy a new car. Like a new car for us would have been 20, 25K. This Barina, dent in the front, Em had a little ding with a guy's bull bar.
Love it.
We're still driving up to this house, which is another 700K. We're at 3.5 mil of property, 700 grand cash in the bank. And it's like, we still sat on that 5 grand car.
Yeah.
And like a lot of people don't understand that delay. And I get it, live your life. Like if you want a Mazda 3 and you want a nicer car, go for it. But for us, the juice was worth the squeeze.
Yeah.
And so we rock up to an auction at Burleigh for a $2 million apartment block. We had a Greyhound at the time. And there's Greyhounds in this tiny Barina. We get out, I'm wearing thongs, like slides. Em's like a bit disheveled. Not that, she ever looks that disheveled, but we're not like that well kept. And we're hopping out of a $2,000 car to try and buy a $2 million apartment block.
Horse, yeah.
The agent rocks up in a $150,000 Mercedes, full suit, and he's like almost laughing at us.
Yeah.
I'm 27, so I think perception is quite a funny thing. I'm never, Nevada and I are very similar like that. Like I'm not someone who's showboating. Like for me, showboating is knowing that I can go out in the backyard this afternoon and play with my 2 boys.
Yeah.
To me, that is the real, that's gloating to me because that is the dream. And it might not be your dream. You might want that 150K Mercedes. Go and buy it if you want it. But I think it's just about that.
You got to pick
choice.
what's important. And if your goal is to acquire more properties, just definitely factor in what that big car loan's going to do to it.
Make the sacrifice
and
if it's worth the goal.
Yeah, I subscribe much to yourself. I value freedom over things. Like,
oh, don't get me wrong, you got a nice car.
Yeah.
I want to ride in that N line sometime, but
the Hyundai N. But again, it's we was it 60 grand. It's a
being sensible.
Bit of a splurge, but we tried to keep it within the realms of reality, and the 150K. That's some path I wouldn't go down when it comes to cars, but for sure, it's good to have nice things, but keep it in check at the same time.
I've got a selfish question. Yeah. This is a technical, and you might not be able to answer it.
Yeah.
So I'm carrying a fair bit of debt, millions of debt, and Emily passed away. You've probably seen that if you've watched the YouTube channel, which is very unfortunate for our family, and we're missing her a lot, which is super sad. And I actually heard Nevada's posting on content on Instagram and online, so check those guys' content out around the broking side. I heard you in a recent piece of content say, basically 2 incomes is the gold standard. Yeah. It's a lot easier to do something as 2 incomes. And yes, I'm one income now, and that might not be the case forever. Maybe not. Who knows? But at this point, I'm looking at, high 7s, around 8 mil portfolio. Maybe thinking of selling one of those kind of $1.8, $2 million assets. I've got, say, $1 million of debt with that. Is there such a thing as debt recycling with an asset, like an asset swap? They've got that in the US. Is there such a thing here, or you can't really do that?
Yeah, it is. It's called portability.
Okay.
So every bank's, they have slightly different policies and how they apply it.
Mm-hmm.
So where it's practical and where we help a lot of people with this is people within retirement if they're looking to downsize.
Oh man, I'm retired. Retired by 35. I keep saying.
So for example, one I had recently, someone in retirement wanted to downsize, they'd still have a very small mortgage on the end property.
Mm-hmm.
Obviously no income, so there's no serviceability, there's no application that would go through to do that. So we actually went toward a portability where essentially the bank moves the loan that's tied to this property and they move it to the next property. Or security substitution's the other term.
Yeah.
There is some key criteria. The loan obviously can't be any bigger.
Yes.
And the LVR can't be bigger either.
Interesting.
And the other tricky part is depending on the bank, some banks, the timing needs to be done sort of simultaneously.
That was one of my questions.
Which is, as you know, is not the easiest thing to line up. Doable, but takes some
difficult,
strategy.
Yeah.
Some banks allow a little bit of a buffer period, but a lot of banks require it to be done at the same time.
Gotcha. Would that be... So I'll be a bit more specific because it's going to be fun for anyone watching because you've probably followed my portfolio over the years or you know a little bit about it. So we've got... I keep saying M and I, that's like in my rhetoric. But Emily and I had built a portfolio with 4 houses in Brisbane and a unit block in Coffs.
Yeah. And
we've got a house in the inner city in Kelvin Grove, which is worth, on a bad day, 1.6, on a great day, 2.2. So let's say it sells for 1.8. because it does need a bit of work and there's a bit, we'll see. We'll see what it sells for. And it could go up another 10% in the next year because I'm planning on selling it early next year, depending on business and goals and what I want to do.
Yeah.
Say the debt's $1 million, just to make it easy numbers. Would the bank look at, so if I did a longer settlement on the sale, say 90-day settlement, would that give me kind of time to get something else under contract? Is that kind of how they look at it?
Correct. So yeah, as long as you're buying something, the loan's going to be lower and the LVR is going to be lower, then you could line those settlements up.
Interesting.
So yeah, extend the sale to allow time to find something.
And basically then, would that work across resi to commercial? This is getting nice and technical. If I bought something that was a unit block, say I have the $1 million of debt, I go buy a cheaper block in a regional area.
Yeah.
Would they then, it's going to be up to the bank to then decide on an assessment?
Resi to commercial probably isn't going to be possible. In saying that, generally commercial assessment is done significantly differently anyway.
Gotcha.
So it'd be a different product. So that would require a change. This is probably generally only applied to resi.
Yep.
But I'd say there potentially would be options.
Well, because if it's resi to resi, you just look at different assets, right?
Yeah.
So maybe I look at a bigger plot of land, which you can subdivide.
Yeah.
And you go, cool, I can buy that for $1 million.
Yeah.
$1 million of debt. Yes, the LVR will have to be, say, 80%. So I've got to have 200K of equity in there and 800 grand of debt. And I'm going from $1 million of debt, if that makes sense.
Yeah.
So then that might work. And then unit blocks can be funny because 3 units might pass, but 5 units might not. So that could depend on the bank and their appetite.
And the valuation and what happens. There's a lot of moving parts when it comes to those unique securities. And it's definitely something like if you're looking at purchasing something like that, get specifics as much as you possibly can.
Give us an address.
And then get your broker to check that with the lenders they're looking at ahead of time.
Yeah, you always want to run it by. Don't just throw, I'm buying this place, and can we do it?
Yeah, we've got a pre-approval for a resi investment property, come back with a commercial farm. It's a bit different.
Yeah, that's right. Yeah. We're wanting to do a 50-lot subdivision, and I told you wanted to buy a house around the corner.
Yeah.
That's a bit of a change of plan.
Yeah, so good to get it, as ahead of the ball as much as you possibly can when it comes to that sort of thing as well.
Yeah, cool.
But yeah, the security substitution applies for, particularly if you're unable to get another loan or sort of meet that criteria again. So, people in retirement, people looking to downsize properties when they're not currently working is another one. Like there's a lot of examples where it can apply. But yeah, a lot of people don't know about it, that's for sure.
And maybe it's not necessary. If you've got the servicing, you can probably shop around for that next property and buy.
Yeah.
It just comes down to the timing.
And sometimes you may, like other scenarios where we've applied it is someone could get another loan, but that other loan's not as favourable. It's not as affordable.
That's a great point.
So, this one's cheaper. So that's why I want,
let's just do the loan port and go down that extra documentation that's a really good point. I mean, it's a lot of people you say retirees, but people who have created some wealth, you get 50, 60-year-olds that might have 2-3 houses and they're part-time now.
Yeah.
Same idea. So I think it's a kind of an untapped area, again, because it's difficult.
Yeah.
And your poor broker's got to do a lot more paperwork.
Yeah. And maybe, and we don't let this be a determining factor for us. Brokers don't get paid on it.
Interesting.
We do it
really?
We do it regardless all the time.
I see.
We feel like if it's a client or non-client, someone needs a hand. Like that's where we sit.
It's the nature of the industry, isn't it?
That's our job. That's what we do. And but that could be a factor as to why maybe you hear about it less. I'm not sure.
I'd say so. I mean, a lot of brokers just try and do easy first-time buyers or mums and dads selling and buying something else because they want the easy money.
Yeah.
Your brokers that really go above and beyond, I would say you guys for me and a lot of the clients that work with you, is when you're doing things like a loan port and you're not going to make any money, but you're building a relationship.
Yeah.
And it's that long-term benefit for everyone.
For us, like we're in a growth phase of business. For us, goodwill is, that's
huge.
Worth it. That's massive. Yeah.
Yeah. And I think it's just your ethos. Like it's the same with my business. We want to do right by people. Yes, we're running a business. I say this to everyone. We are running a business, but we're here to help you genuinely. And so not everyone's going to be the right fit for, every business. That's always the case. You're never going to make 100% of people happy. But if you can come with that as the first point of call, we're here to help you and we're here to do our best we can. I know it can make a huge difference because I'm quite interested in that.
Yeah.
Like I'm going to explore that opportunity with you in the next 12 months and we can document it here and share with people what maybe I end up switching to and why.
Yeah.
And part of that is for me, part of that is selling an asset that has made a lot of growth, made a lot of money, and might have a lot of maintenance attached to it in the next 7 years or 10 years, and going to buy something that's maybe slightly higher or similar cash flow with maybe a bit of value add. And so it's just, that's where strategy becomes really interesting.
Yeah.
When you can buy, sell, rejig, and move into that consolidation phase.
Yeah, absolutely.
Cool. Well, we might wrap this up. This has been a really good chat. I think if you guys found this valuable and you want more of this type of content, make sure you drop a like and subscribe to the channel down below. If you're looking for a broker, where should they head?
You can go to cubeloans.com.au or on Luke's website, there is a mortgage broker tab there where you can find our details.
Yeah, I think even in the description below. So there's lots of ways you can reach out to the guys at Cube and have a chat. And if you want to see more content on real estate renovating and financial freedom, give this video a click in the middle here, and we'll see you in the next one. Peace.
Thanks, everyone.
Bye.